Hello traders, welcome back. Today is 25th of November. My name is Neville Hornsey, market as YouTrading, and today I'll be taking a look at the Commodity Channel Index Indicator. Okay, first things first, we should find it in the indicators panel. So we go to oscillators, go to the Commodity Channel Index, which is the CCI. Click on that, and here you can see at the bottom of the sort of screen, I've got this CCI oscillator. I'm basically going to change it to make it a bit clearer. So I'm going to keep the parameters the same. 14 periods is the sort of period I'm going to use. Overbought will be 100, oversold will be minus 100. With the style, I'm going to make it white and thick so you can see it. Overbought, I'm going to get rid of. Oversold, I'm going to get rid of. And then here, I'm going to just change these to that. And then take off these colors. All right, so now we've got a clean CCI indicator. I'm just going to concentrate on where it is in relationship to this zero line, this signal line. So I could say that, you know, as a trend follower, you could use the CCI indicator to confirm a break above moving average. So here you can see a big bullish candle here, closes above the 20-period moving average. CCI indicator confirms, and then for several years you've got this trend up, and then if you look back, you could have had a trend to the downside. So between 2007 and 2016, so a good 9 years, you could have been in two massive long trending trades, and you could have made thousands of pips. And then you could have made a few more in 2016 to maybe the end of 2016. And then you're giving it all back between 2016 here all the way to 2020. So for 4 years, you'd have been stopped in and stopped out, and you would have given a lot of these gains back. So as an ex-trend follower, it's great when you do get these trends, and using indicators to sort of get you into a trend is great when it works. It's just a bit painful when it doesn't work. So I've basically got down to the point now where indicators like this are a filter for me, a confirmation sort of filter. I don't trade off them. I just use them to sort of confirm my overall bias. So on a monthly chart, you know, if I want to go long like we are at the moment, then price action sort of leads the way in terms of getting in and out of a trade. But it's great when the CCI indicator is above the signal line, price is above this 20-period moving average, and everything's looking like it wants to go higher. Go to the weekly. You know, if we just sort of stick to recent times, we had a pullback to the 20-period moving average. CCI went underneath the signal line. We didn't get, say, a reversal to go short, but we did get a pullback, and then people bought the dip, and then CCI indicator sort of confirms that we're in this bullish move again from September as the weekly bars stay above the 20-period moving average. Going to the daily, you know, we had this big bullish move here. Didn't quite close above the signal line on the CCI. You know, it happened on the 11th of November. So on a daily chart, the 11th of November signaled that we were looking for longs. And if I go to the hourly, you know, if we filtered out all of that before, here you can see that we had lower highs and lower lows in a downtrend. Then we had this price action reversal. So for price action traders, you know, you would have got in down here, sort of like around the 113 sort of mark, and you could have easily made a good risk to reward of 1 to 2. And even using the CCI indicator and EMAs, you could have possibly ridden this trend and got out quite safely when the price got back below the 20-period moving average, and the CCI indicator confirmed that. So for price action traders, you know, you would have actually caught this. But like I said, on a daily, if you're using the CCI indicator in conjunction with price action and this EMA sort of trend following system, then you wouldn't have actually been in at those sort of levels. But you can clearly see when we get to the 14th of November, the weekly, the daily is above the 20-period moving average. CCI indicators above the signal line. And on an hourly chart, if I go back, once again, we've got a high, a low, a lower high, a lower low. And then we start to reverse that. We just get like this high, which is lower than this, but then we get a higher low, which is confirmed when we get this breakout here. So price action traders, we sort of see a potential reversal to go long. We know that the monthly, the weekly, and the daily are also suggesting that we go long. And here we can see that, start off with a breakout. So we've got this aggressive breakout here. Price action's above the 20-period moving average on the hourly. CCI is above the signal line. And then I've just sort of demonstrated that, the potential to make, risk 1 to make 3, which is a great risk to reward, was there. The highs were up here, just above your target. Or if you had waited, to maybe try and do that trend following thing where you sort of try and capture as much of the trend as possible, but got out when price was below the 20-period moving average, you'd have still made a good risk reward of 1 to 2, even if you closed out at 114 and 70 cents here. So fingers crossed, that will keep you from using indicators as, like a signal to get in solely. Hopefully you'll use price action and, what you know about the markets fundamentally to get in. But if you're looking to filter out your trades, making sure that the monthly, the weekly, the daily, all the way down to the hourly confirm your bias is a great way of, capturing these in high probability risk to reward trades. All right. I hope that makes sense, and I'll speak to you tomorrow.